If you've ever contemplated a Roth conversion, then today's video is for you. I'm going to explain what a Roth conversion is, why it's advantageous to perform this action, and how two specific benefits can greatly improve your retirement plan using this strategy. I'll also share an easy to understand example so you can see the impact of a Roth conversion. Welcome to the channel. If I haven't met you yet, my name is Christian Klassen. I'm the co-owner of 402 Financial, and I created this channel to help you make the most out of your retirement. To start with, let's define the basics. What is a Roth conversion? In simple terms, a Roth conversion is the process of moving money from a traditional retirement account, such as a 401k, 403b, or an IRA, to a Roth IRA. It's important to consider when transferring the money, you must pay tax on the converted amount, since it was tax deferred previously before the conversion. When the amount is moved to a Roth IRA, future growth and withdrawals within the account are completely tax-free. Why would somebody do this? The main reason is the future tax benefits of the money in the Roth IRA. Even though you pay taxes on the amount converted now, any gains in the Roth are tax-free, and there are no taxes on distributions in retirement. It's a strategy that can potentially end up saving you a lot in extra taxes being paid to Uncle Sam. There could be many reasons why you might want to consider a Roth conversion. First one is when you expect to be in a higher tax bracket, and it's better to pay the tax now when the bracket you are in is relatively lower. You might also want more flexible income sources during the retirement years and to avoid certain complications with 4-star MDs. Another practical reason is if you expect your investments to increase before the time comes to retire. To transfer them into a Roth IRA now, all of that future growth is going to be completely free of taxes when you finally withdraw it. Thus, for those who are thinking ahead, this can be quite strategic to help manage taxes on an increase in your growing nest egg. Let's pause and illustrate this with a very overly simplistic example. Suppose you have $100,000 invested in a traditional IRA account. You decide you want to convert that amount into a Roth IRA. Now you're going to be expected to pay taxes on all $100,000, but let's pretend that you're in the 22% tax bracket. So you're going to pay $22,000 in taxes now. But let's fast forward 10, 20 years into the future. Say thanks to continued growth, the value of that Roth IRA is now $200,000. That's the true beauty of the Roth IRA. When it's time to retire, you start withdrawals, that $200,000, which is doubled in value, you won't owe a single dollar to the government in taxes. Now, there are more intricate ways that a Roth conversion can help. Your actual situation is going to depend on your income from the year of the conversion, the size of the conversion, and other different factors going on. While simple to understand in their principles, you will want to professionally consult your specific details with a tax planner or a financial planner for such plans to run tax projections. Now, if you're thinking about the advantages of a Roth conversion in light of this example, please feel free to give this video a thumbs up. If you want to know how this might apply to your situation, please leave a comment below and I'll be glad to assist. As you can see, the first big benefit of doing a Roth conversion is both tax-free growth and withdrawals. So when you convert a pre-tax account like a 401k or an IRA into the Roth, any gains after this is tax-free. This means you can see your investments grow over time, and when you have time to enjoy your retirement, the sum of that money you're going to withdraw is tax-free. Imagine your investments are growing without any worry of having to pay taxes on it later. When you hit retirement, you won't owe a penny on the gains in the Roth portion of your investments. That's a big leg up in retirement, especially when managing your income at that stage of life is so important. Now let's talk about the second big benefit, flexibility in retirement. This is one of the greatest advantages of a Roth IRA. It doesn't have required minimum distributions or RMDs, unlike traditional retirement accounts. For instance, once you reach 73 years old, you are forced to take money out of your retirement account every year, regardless of how this affects your income, because you haven't paid taxes on it in a pre-tax account. In a Roth, you get to decide when to take that money out, and this flexibility can be a big deal to retirees because you get to choose when to take the money out of your Roth IRA without ever having to worry being pushed into a higher tax bracket because of RMDs. This helps in controlling taxable income, especially when trying to keep more of your money in your pocket throughout retirement. There are many times people come to us whether a Roth conversion makes sense for their situation. It's not always a black and white decision, but if you're unsure and need help figuring out whether a Roth conversion is the right move for you, feel free to reach out to me for a free call. I usually have a few spots open each week, and you can schedule with the link below in the description. If you've not already, don't forget to hit the subscribe button for more tips on making the most out of your retirement. Until next time, I'll see you in the next video.